Yesterday, after the large overnight gap down, the market caught a bid pretty early. We never came close to testing the London overnight low. Um, we we did have a dip right on the open from 274 and a half down to 273 and a half. But then the rest of the day, market had a pretty good bid. So my thought process really, once we pulled back to here and then started to hold above this area right here, that's when I changed, not changed, but confirmed that I thought that we could start to fill the gap. And again, I didn't. This is the markup that we put on yesterday morning, so you can kind of just see, just in terms of demonstrating like the thought process. The thought process was, what would happen if we popped up in this area here and we failed? Would we roll over and test the overnight low? Well, we came down. We did come off $1. We came nowhere near testing this, and then the next move was up. It was much stronger than the down move in terms of straight up, held, and then moved higher. And so then this becomes the support. That's all. There's potentially resistance on the open. That's why I was buying into this pullback here. I believe I was off the desk, so I bought here, and I think I got taken for some. We popped up about 30 cents. I sold some. Then I got stopped out pretty much this bottom wick here before the move went to the new highs. If I was sitting on the desk and actively watching the market, would have been watching to see if kind of held here in the 40-cent area and then got back above 50. We then got through the prior day's support, got above it, one final flush, and then this morning we're gapping right back inside of the prior day's range. This, as I put in the notes at the top of the game plan, this has been basically the market since the beginning of May. Very different. So since we put in this low here and zoomed back up and started moving sideways at 270, it's been very different in terms of even like this day here where we gapped below the support. What happened? Boom, right back in, by the next day, right back inside of this range. So not seeing any of that, what we saw from in February, March, and April, which was when we had a gap down, it would just lead to these huge down moves where we had a gap down, we'd pop a little bit, and then larger down move. Buyers are really in control. It looks like we're going to get back into this target area that we got to a couple weeks ago, the 278 to 280. And the longer we spend up in this area here, if we get a break above that 280, it could be very powerful. Take us right back up to the all-time high, and we'll see what happens from there. But we can look forward to Trump tweeting about the market again if we get back up here. He hasn't tweeted since this. Let's take a look at CLDS. So somebody put that in the chat. That clearly is the most playing thing this morning. It's done in about 6 times its average daily volume already. Yesterday it ran up coming into this news, which is interesting. I'm not sure what was going on there. If people knew that the FDA was going to give them the special designation for their treatment. You can see the move yesterday from 4 to 6. Now, if we want to go back, kind of see where the stock was a few years ago, just to get a sense. 200, 400. They probably did some reverse stock splits. Generally, when a stock has an 800 top and is down at $6, it's done some reverse stock splits, which means there's fewer shares outstanding, which means that when people pile into a low price stock, you can have a situation like we saw, and that was a Gino the other day, where it went from like 5 to 20. So that's probably why people are bidding it up now. They see this chart, they see, oh, it was $20 here. You see this here, 14, 15. That's what we're looking at. And it's all going to be just momentum based, people shuffling around, moving the float around between each other. On the surface, that approval, that FDA designation looks good to me. I'm not a biotech expert, so I don't know how real it is. I guess we'll start to see the analysis come out. But for now, it really is just about the game of hot potato and who's in control, the buyers or the sellers. So here's the first move in the after hours to $9. Looks like people were buying it to eat. And then this morning, when people got to their desks, they brought it and pushed it up. not quite a $4 move here, about $3.50 move. This was a $3 move. So what I want to see now that I can see a clear top in the pre-market, I can see sellers really controlling it all the way back down to $10. What I want to see is if this lower high holds here. If this lower high holds, we're looking at a retest of $10, and then we'll kind of see from there. A couple of things could happen. Retest of 10, then we go and we test the pre-market high, retest of 10, make another lower high, like something like this here. And then we take out that 10 and boom, it's back down there. That would be the seller's win situation. The buyer's win situation is more likely it stays above 10, quickly gets back to the 11 area, consolidates, and breaks to the upside, and hopefully takes out the pre-market high, and we can capture a move to that 14.15 that I showed you on the daily. Just be prepared to play it either direction, and we'll see if any good news flow comes out in analysis, whether or not the news is really a big deal or not a big deal. That will kind of inform my bias longer term. Just to give an example, like with AXON, because I knew that them spending $60 million on a little piece of shit, I shouldn't say that. I was getting a $60 million loan on a drug shouldn't increase their market cap by $300 or $400 million. In fact, shouldn't really increase it at all. That was the idea behind looking to short it $5, $6 per move back down to kind of where it started from. So we'll see as the news kind of flows out in CLBS, whether it's more a case of this is the beginning of something, or it's going to be a higher price stock, or it's going to go right back down. ORCL, Oracle. So Oracle, the numbers were fine. The guidance was okay. It's reacting negatively because they've removed their cloud guidance. Cloud obviously is one of those hot sectors like AI, like machine learning, and it's it drives a lot of the stocks like an Adobe and Amazon is their profit center, is the cloud stuff, and so the fact that Oracle's cloud numbers are slowing to the point where I assume that's why they're eliminating the cloud guidance. They just don't want to show that it's slowing. That gets people nervous. Now, we traded it on the short side after the last earnings report, which was kind of this down move here. I don't see why it would really take out the low from following the prior earnings. So my first instinct here would be to be buying that and to looking for it to have some sort of bounce inside of this range. Just want to go back a little bit further just to see if it actually does. You can see going all the way back to over a year ago. So this is a big deal. If this gets taken out, there really isn't much till around 42.5 in terms of support. So I would look for this to be defended. Let's zoom in and take a look at it. And this is a really liquid meme. You don't have to really risk more than 10, 15 cents in this one. So after hours, that's what they defended. It hasn't had much of a bounce, which is not a great sign for it from this level. It's good for us to see how hopefully it'll get tested on the open again. But certainly a flush through 44 or even into 44 in that area holds and then gets back above, let's say, 44.20. You want to play it for a bounce, at least up to where it bounced in the after hours to 75 cents. If it closes above $45, swing long, look for it to move back up into this area here. Notice that initially how it went up because the numbers were good. And it wasn't until they said they're not going to give cloud guidance anymore that it did this. So that's that. The next one is Disney. As you saw, they raised their bid for Fox entertainment assets. So the deal with this is, just very quickly, they're going to pay in stock for this deal. And so there's these large, what are known as risk arb funds who will short the acquirer because they've raised their price. Actually, I'm not sure if they raise the price if they're doing more stock, if they're actually doing a stock cash combo. But often what happens is the risk arb funds will kind of sell. And you saw initially it was down, but then when they came out with their press release and explained why they raised the price for the assets, the tax cut obviously makes the assets more valuable. There was a large corporate tax cut, which impacted Fox. And then also they claimed operating efficiencies over at Fox. I'm not sure exactly what that means, but it then popped back up into this area, this resistance area before getting hit again, it looks like, while I was getting ready for the morning meeting. my thought was I definitely would want to be a buyer in this area down here, and I would watch to see if it failed here again. But if it actually showed strength on the open, meaning came up like this and then was consolidating above 108, I would look for it to move to 110. And if it closes above 110, the next major resistance area is 112, 112 and a half. I think the market really likes the combination of these assets. Personally, I think longer term, if you're looking for longer term stock, Disney is really the one company that has potentially the ability to compete with Netflix in terms of the amount of content assets they have now. I'm sure that's the thought process of some of the hedge funds with higher time frames. So here's the area I was talking about in terms of the next major resistance above 110. Yeah, Netflix's hype is very overextended. I'm sure Aaron is wondering if this is start looking for a reversal. We'll look at that when we look at second days and technical setups. It's definitely worth looking at. It is extended quite a bit. WBA is just getting added to the Dow Jones, so we'll get into some more probably ETFs and funds and things like that. I don't think it'll have nearly the impact that when they announced Twitter was going to get it added to the S&P when it went from 35 to 45 in a few days. But it's worth noting that it is somewhat beaten down. And, you know, if it's strong today and you're trading on the long side and it gets a close somewhere up in this area here, could be a good multi-day situation. So initial reaction was 267. And I took out the 67.50. And then 66, you'd think that it would be a buy here. That's only $1.40 above where it closed. Soft gap fill of 65.5. There's a lot of accumulation going on here for a couple of weeks between 63 and 64. I don't think it's that big of a move. The 66. As long as it's holding above 66, I'd be long it. Seeing if it you can get back up here. Again, if it closes above 67.5, this after hours reaction high, I would hold some. Look for a swing up back up to 70, 72. All right, second day. So let me just start with Netflix. Ooh, didn't even see it was up another 9. So yeah, it's really, they're really squeezing this now. So I think this started with like somebody raising their target. I don't remember who it was. You can, if you remember, you can put it into the chat. Somebody, I think it was Goldman or someone gave it like a 430 or a 450 target or something like that. That reminds me of the internet bubble days. So this was earnings after their last earnings. It sold. I'm sorry. This was their last earnings right here. Then sold down when the market was weak down at that 290s, and is basically gone now from 300 to 415, which is almost a 40% move. It's above $80 above the post earnings high, which is over 20%. It's from 280 to 415 is, oh my God, what is that? It's almost 50%. Yeah, I mean, there's going to be a really good short trade here. Certainly there was a good long trade on the initial break above 368. So let's see what this was here. This was 368 to 397, so it was about 35 points. 85. Yeah, I mean, I'm sure some people are thinking it's going to get to 420, 425, something like that. But let's say it's going to try to put in the top today. First of all, I'd have alerts up at like 418, 420 to see what it does from there. Because it could easily fail there and come back down to 410. But let's say on the open, it doesn't even get up that high. It gets to like here. Have alerts at 410, 409. What you want to see is, does it get back down below 410 and start to kind of move sideways tight? And if it does that and then breaks to the downside, people are going to be stepping in at 405. The real short trade or the real major pullback would look something like It goes up on the open. And again, I wouldn't put a high probability that happens today. It could definitely have a pullback today. I'm not sure if the real top would be in though. Something like a major pullback would be like it tops right on the open, just gets crushed through the prior day's high, tries to rally back up, does like a rally into this area, and then closes below 400. And then you would look for that move tomorrow back down to 385. That's what it would look like. PTCT. So I had a script in yesterday. First of all, I got the alerts here at 47.46. Whatever, I didn't see the news stories for why this entire move got erased, but I actually posted a video last night about when people are trapped, and it did like 10 million shares on this gap up here. People were, the thought process here was this is really good news. They bought into this pullback, really heavy volume. It closed pretty good around 48. There's a lot of people long this stock. And then someone decided on the open yesterday to just dump like a really big position, and it went from 50 to 41 in like a couple of bars in like an hour. Everybody here who bought the prior day is now out of the money. They start to sell. It just accelerated. And so then I started to look at the longer term chart. Like, okay, I was like, 34, maybe it might bounce there. And then it got down to 34, 35. And I said, they still hadn't done the volume to cover the prior day's people who bought it. So I'm like, maybe it'll get to 32. And I'm like, I really do want to buy it at 32 because it could bounce back up to 36, maybe even 38. And so I had the script to start buying it at 32.30. I actually bought the low tick yesterday, but my bigger buys were at 32. But I do have some, I got it right at the close, and now it's a couple points higher. So the way that you handle this is if you're not in it, and also for me, if I want to buy some more, is I want to see a flush down to the area from yesterday. So I'll have an alert at like 33.30, 33, 32.70, and just kind of buying in this area here where it consolidated at the end of the day, 33.20 to 32.70. And if it flushes in there, buy. My original script is still here to buy here as well. But now that it's gapping higher, the likelihood of it getting all the way down to my 32 buys is lower. So I'd be looking like here. And then playing for a move back up to here. JD. JD is one that I actually, all my bids got hit yesterday on the open on this one. So this one, remember it was the Goldman investment, it was good news. It had erased the up move, and so I was very happy to be able to kind of buy it back in this area here. So my script basically started building into this position. Actually, it was a few pennies from being stopped at right at the low on the open. Then it started to show some strength. Then it failed, started to roll over again, actually stopped out of some, but it's gapping up this morning. My thought process was to be selling into the 43.5 to 44 area when I was buying yesterday. And so I'll look, same thing here, I'll look for a higher low today, 42 to 41.80, see if it has a higher low, or if it just consolidates above 43 and breaks to the upside. Now, my initial targets from buying down here were here. Doesn't mean it can't get all the way back up to 44.5, 45, but this is kind of the more conservative area to be looking for sales.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.